Welcome to the latest in our CEO Leadership Series. Now, Bank of Middle East is joined by Steve Bertamini, the Chief Executive Officer of Rajhi Bank in Saudi Arabia. If we could begin generally, what are your views on the bank's performance in the last 12 months?
Well, I think the last 12 months have been very good for Rajhi Bank. We've seen double-digit net income growth through the first 9 months of the year. Our asset growth has been in excess of 3%, which compares with the market, which is actually down 1.8%. And we've also been able to achieve quite a few of our critical initiatives, which I'm happy to talk about a bit later in the interview.
You've had, in fact, I believe 9 quarters of growth now. Islamic banks overall in the GCC have in general been more profitable than their conventional peers over the last couple of years. Is this a trend that's going to sustain?
Yes, I think we've seen Islamic banks now outperforming conventional banks globally for the better part of the last 10 years. And every indication seems to appear to be that that will continue. One of the big advantages Islamic banks have is much lower cost of funds, and by definition they take a lower risk profile, which obviously worked quite well, particularly during the turbulent period that many of us had to face a few years back.
So how is Rajhi shaping the kingdom's financial landscape? What's your focus for 2018, and how does that fit in with the general economic thrust of the kingdom's agenda?
Well, obviously we're very aligned with a national transformation program and the 2030 vision. When that first came out, we spent quite a bit of time as a team analyzing that and finding areas that we thought made the most sense for us. So, for example, housing plays very well in our focus as a retail bank. We thought SME would be a great opportunity for us to also participate in, and of course, with the increasing of females in the workforce, we thought that was also a great opportunity for our bank.
Well, Moody's says that Rajhi is, and I quote, best positioned in the kingdom. And this, you touched on this already, thanks to the Islamic franchise and the low-cost deposit base. But having said that, do you have any concerns about the corporate sector?
Well, actually, we've done quite well in the corporate sector. As you might be aware, we've been underrepresented for many years.
Number 7 in a field of 7, I believe.
No. It's more than 7 banks in Saudi Arabia. We actually grew our share. From 2015, we're 6.1% share. As of third quarter of this year, we're at 7.6. So, which is quite a significant increase over a relatively short period of time. And we've also seen the quality of our book improve. So we now have very much market-leading indicators in terms of non-performing loans, and our level of reserves is substantially higher than the market. So I think we built the book well.
And is this going to continue to the future? Where's the competitive position for the bank?
Well, for us, obviously, retail is the area that we excel in. As you know, we've got basically a fourth of everything. We're a fourth of the branches, a fourth of the ATMs, a fourth of the point of sale, and we very much focused on automation. Having said that, as I mentioned to you, in both SME and in corporate, we believe we've been underperforming for some time, and also in Treasury. So we've been putting more focuses in those businesses, and we've seen good gains over the last 18 months, and we expect that to continue.
Okay, if that's going to continue, are those the key areas for growth potential, or are there other areas as well?
Well, the number one growth potential for us is mortgage. If you think about the country wanting to increase the percentage of home ownership, we're in the prime position to take advantage of that. Our share in mortgages has also grown quite substantially. We're at 20.4%, I believe, at the end of 2015, and we're now at 24%. Roughly 42 to 45% of every mortgage written in the last 18 months we've been able to have occur at Rajhi Bank. So strategically for us, growing this part of the business will position the bank, I think, for long-term success.
The problem is, though, that you're in a marketplace that has got issues. The IMF is expecting GDP growth in Saudi Arabia to be close to 0 for 2017, and looking to the whole of 2018, they're talking about a softening of credit demand. That's partly on the back of reduced government spending. Is that going to impact your prospects for the year?
Look, of course you have to look at what's occurring in the economy, but we're really focused on continuing to grow our position, improving our products. Or for example, during 2017 so far, we've launched 10 new products. We've been investing very heavily in our digital agenda. So we still think there's a lot of opportunity, and even the new expansionary budget that was just announced last year, I think everyone expects that that'll have a positive impact on the economy. So we remain relatively optimistic about 2018.
All right, and I'll throw a little bit of extra optimism in there, having tried to dampen it down earlier. There is a framework being put together to allow more foreign investment in the Saudi market. How important is that?
Look, I think that's critical. If you think about the country's ambitions to transform the economy, it needs both foreign technology as well as investment. And I think you'll see the kingdom increasingly leverage that. And this is partly why there's been so much focus on making changes to foreign investment rules, to how quickly trades get done, the T+2, -1, et cetera, all the changes that are taking place to enable and to increase confidence for foreign investors to come into the market. And of course, Aramco is expected to be a game changer, not only for Saudi Arabia, but for the Middle East.
Now, you mentioned that the bank has deployed several new products, implemented new technology in the last 12 months. How are customers reacting to that? How things like instant card issuance, has that sort of thing been a help in customer acquisition?
Look, there are two broad measures that we look at to really see and understand how our customers view us in the marketplace. The first one we use is something called Net Promoter Score, which really is a measure of customer advocacy. Without getting into...
I really like this bank, you should bank with it as well.
Yes, yes, correct, close enough. And effectively, we've seen our Net Promoter Scores, and this is externally benchmarked by a third party, to go from number 7 in the kingdom to number 2. So we've seen a huge improvement over the last 18 months. The second area is market share. We monitor market share across a broad range of areas, and we've literally seen our market share increase in virtually every category over the last 18 months as well.
And there have been changes within the bank that the customer themselves won't necessarily see. There was the payment service hub in collaboration with Accenture. What does that sort of thing mean for the bank and for the services you can offer?
Well, ultimately, the more you can automate and modernize your infrastructure, the better your cost, the simpler your procedures, the lower chance of anything going wrong, and therefore service levels tend to go up. So we've been investing heavily in that area. Another area, for example, has been robotics. We believe we're one of the leaders in implementing robotics across the Middle East. We've got over, we call them bots, 200 bots already in the bank, dealing with, I believe it's something like 15,000 transactions per day. So we think this is another area that allow us to not only automate, but also improve service and at the same time lower our cost.
That's the kind of thing that I speak to a lot of bankers, obviously. That's the kind of thing that we always seem to end up talking about, is some of the changes that you make are going to be things customers don't see, but should make their journey easier, more efficient and quicker. What are the key challenges for the bank now and in the future? Are they all going to be focused on delivering that service as seamlessly as possible? And if you are going to do that kind of automation, what does that mean for, say, levels of employment in the bank?
I think increasingly banking is not dissimilar to many other industries. I think as automation and technology becomes a bigger and bigger part of your business, that requires different skills and different mixes. So for example, this year, despite our growth, our employments remain relatively flat. So I think we'll end up with the same or fewer jobs of better paid people. And increasingly automation and really digital technology will make it much easier for customers to self-serve and to get better levels of service.
Because that's what they'll want. I speak to people within this industry and we end up saying, right, the competition is not other banks, the competition is going to be Amazon, the competition is going to be Apple, because they are the people who are, and companies like them, who are leading the digital charge. Because this comes down to what is the future of banking, what's driving the operational change, and how are you, as Al Rajhi Bank, going to be able to keep ahead of that or keep on top of it?
Look, I think the companies that you mentioned as an example are exactly the right ones to look at, because what's happening is they are changing the customer experience. They don't have any legacy and they're able to redesign processes. So in many ways, we have to do that to ourselves, and this is an area that we've been spending quite a bit of time. For example, we now have an innovation center, so we can see how customers interact with the technology, where do they look, what frustrations do they have, because increasingly it's the experience that really makes a difference. People expect a bank to work like Amazon. So therefore, when that experience isn't the same, they find it very frustrating. And I think in many ways they've helped the industry recognize that they need to move faster, otherwise they're going to be in a competitive
It's about quality of customer service.
Exactly. And the experience around everything you try to do.
So, this may be the wrong question to ask a banker, but what excites you about the coming 12 months? What are you looking forward to most?
Well, I think as we digitize our bank faster, actually. It opens up resources and capacity to invest in the business. We're constantly changing our business model. So for example, the way that we used to have a branch and open a new branch 2 years ago is materially different from the way that we're opening branches today. You still need some type of physical environment, and many times simply because of regulatory restrictions that require an employee to physically cite a document or have a wet signature take place. But even that'll change over time. But you still need to have an environment that's technology friendly, and this is where we're evolving and trying different models. So I think there's a lot of new exciting formats, products, and experiences that we can create for customers, not only for the next 12 months, but quite frankly for the next 3 to 5 years.
Well, if we can look at specifically the faith-based side of things, you certainly one of, if not the largest Sharia-compliant bank in the world. In terms of that lens, what are the bank's top priorities going forward?
Well, look, I think for us, we always want to make sure that we are constructing products in a compliant way. And this is where we're very fortunate to have, in many ways, quite a conservative Sharia board. And this is one of the differentiators that I think has really helped to inspire confidence in our customers, and one of the reasons that we continue to do well. For example, you might be surprised to learn that our share of current accounts today is the highest it's ever been in the bank. And as you know, having a very strong current account deposit base, particularly when you're a Sharia compliant bank, is a huge competitive advantage. So we always make sure we stay focused on that, and we've been able to see that happen over the last extended period, but in particular the last 18 months as well.
Now, you talked earlier about the growth in your corporate banking business. This is one of the major challenges facing Islamic banking and the Islamic finance sector in terms of developing that side of things and those sorts of products for the future. Obviously, you have the retail deposit base to be able to leverage. What's the best way forward for the industry in terms of creating a corporate finance, a vibrant corporate finance sector?
Well, it comes back to product development. For example, this year, I want to say about 2 months ago, we actually for the first time had FX forwards, which may not sound like a big deal, but for us as a bank and also for the industry, was really quite helpful. You have many conventional banks that will create an Islamic product, but many times that doesn't quite appeal to everyone. So we've worked very hard to innovate at a faster pace than we have, and we think that over time the gap between conventional and Islamic banking will continue to narrow, which is I think one of the reasons that you continue to see Islamic banking outperforming conventional banking.
You're a big bank in the biggest market in the GCC. What's, stepping back and looking at the region as a whole, what's your outlook for the financial markets and for the GCC economy overall for next year?
Well, we believe the GCC economy will do better next year than it did this year. Obviously, given all the difficulties and the fact that even places like KSA were basically zero growth, or even 0.1, we believe next year should be better than that. I think IMF is forecasting 1.1. This is before the announcement of the expansionary budget. I think UAE will do better, Kuwait should do better. So I think if you think about some of the biggest markets in the region, the future seems to be a bit brighter than it was during 2017.
Steve Bertamini, thank you very much indeed.
Thank you.